Wow. Thank you for being here. If it's your first time, welcome. Karibu sana, and thank you for taking time to come. If it's not your first time, thank you once again for being back. I'm also grateful to myself for being back on this seat, because you can do something and not do it again. They say it's easy to start, or sometimes it's easy to start but not keep moving, and sometimes it's very hard to start, but when you start you can't stop. So I'm also happy to be back. It's been an interesting series. This is our final episode 5, and I can for sure say it's been getting better and better, being in front of cameras and doing this thing and talking to us. I'm also getting to learn in the process, surprisingly. I'm also discovering new things about this subject as I talk about it, because like I said, this is an introductory series that talks about SACCOs, credit in SACCOs, rather understanding. The series is actually understanding SACCO credit. So it was supposed to introduce now the other things that we will be talking about, and I'll be sitting on both sides of the table as I talk to SACCO members, potential SACCO members, and the SACCO stakeholders. Stakeholders actually, SACCOs, the regulators, staff. So sitting somewhere in between at the nexus of both. So I'll be talking about this and this, but I think for this first series, I have been talking mostly to borrowers, potential borrowers, and SACCO members like you and myself. And so welcome. My name is Lynn Motweri. I am the host. I have been the host. I'm looking forward to the next episodes that we'll be having guest speakers who can tell us more about SACCO and the SACCO ecosystem and the financial ecosystem altogether. So thank you for keeping it here, and I hope that even as we do this last episode, which is more of a conclusion or wrapping up what we have said, maybe with a few additional points, you get to enjoy, you get to learn, and you also become more curious around not just your membership, but your plan as a SACCO member. Now let's delve directly into what I want us to talk about very briefly in today's episode, which is how to position yourself now, not just as a borrower, but for the future of SACCOs. We have seen that SACCOs are maybe not yet, but they will increasingly, and they will in the few months, years to come, move to data in decision making. Now we have seen that it's a communal thing. It's a communal thing. It's something that was formed to empower groups, to empower communities. And of course, at the end of the day, you're empowered as an individual. So some of the systems in SACCOs have relied heavily on very manual processes, very manual. And you see right now everything is revolutionizing, or it's getting digitized, and we are increasingly adopting data in decision making in every area, in every aspect, because data surprisingly has always been there, but its use has not. And that is what we are pushing as data scientists, as BI people in business intelligence. We are pushing towards having data, the SACCOs fully adopting these data-driven decision making, data-driven processes, data-driven policies, data-driven products, because that is the next that is the next way of building products for customers or for members. We call them members in SACCOs. It will be based on the data. Our data tells us who is doing this more, who is purchasing this more, which sector is a key. We do segmentation, customer segmentation, which sector is a potential consumer of this product or this service. Now, how do you position yourself for the SACCO of the future? Data is what is will be looked at. The footprints that you leave everywhere. And this may not even just talk to SACCOs, it may also address institutions, any lending institution. What are your footprints? What are you leaving as you transact online? What are you leaving as you make decisions around your money, the bills that you pay? How prompt are you? It's very sort of scary, but also very important to know that very soon all these systems, actually they already are. It's only that people are not being loud about it because of audit and regulation, and also ethics. But it's happening that all these systems are integrated. So your habit in doing something as unimaginable as paying that water bill, they are getting interconnected more and more by the day. So you'll find that how you're repaying that water bill is the deadline date, finding you without having paid that bill. The way you repay your mobile loans, it's connecting to SACCOs. It has been to banks, it's connecting to SACCOs through the CRB, of course, and other means, surprisingly. And that's why I think people are talking of regulating AI, but we also have the debate around it. Let's not regulate it before it even kicks off, before we see its full capabilities. But that footprint, it's being called a digital footprint. It is very important. And it's important that if you intend to empower yourself as a SACCO member, through SACCO membership, it is key that you leave a very good track record. This changes. If today I have a bad track record, I have an opportunity to improve it through my habits. Now that is what is called behavioral data. What we have, the money that you borrowed and how well you repaid it, that statement is the financial data. Those statements, all of them, they lead to your credit rating. But then we have what we are calling alternative data. This is the data that is increasingly being adopted even in credit scoring in banks. But now, SACCOs, there's a debate around it. Also, not a debate, it's actually something that will definitely happen, most definitely, very soon. They are also using that data to do what we call the risk-based lending. So now the rate will not be talking about 12%, will not be talking about 10% for these loan products. We will be talking about your individual rate based on certain factors. Of course, we have that fixed rate that they may also have, like banks have what we call Kesonia, and then other factors, including the bank, the SACCO charges will come in. But you as a member, even you as an individual, whatever you're doing, if you intend to ever borrow, whether from a bank or SACCO, you need to be informed. You need to leave a good footprint in your transactions. Make your repayments in advance, however small they are. That shows your behavior. It doesn't show your bill, your water bill will not be used as a financial statement. It will be used as your behavior. It's called behavioral, it's your behavior, it's your behavior. It's just like we have how we make decisions when it comes to buying something. In behavioral economics, we look at, you can buy emotionally because you just woke up and felt like buying something. We can buy, some people can be rational, although it's quite broad, that word, but you buy it because you actually need it. You can also buy it because people are buying it, it's a trend, so let me also buy it. So the same way those decisions are made out, that is your behavior around purchasing things. And this is a behavioral data. We have, that is part of alternative data. And those are the things that will be considered. So what you do, your daily behavior will position yourself. And I can tell you this for sure. You may be wondering, why are we talking about it may look basic, like we're talking about, repay well, but what if I can't, or I don't want to? No, that is also behavior, Some people refuse to repay, one, because of ability, and I tend to think this is the most common reason. Something changes, and for some reason you cannot repay. But we also have we also have what we call, what is it? I'm forgetting the word. If I remember, I'll say it. But we also have, you have the ability. Oh yeah, it's called your moral behavior around not getting the exact word, but it's around your morality. Yeah? You're refusing to pay. You can, but you just refuse for some reason. You've had people say, I have a balance of 3,000, but that one can wait. That is now the moral aspect, which is it's not good, because if you intend to ever borrow again, which I think if you have borrowed once, you should be intending to borrow again, it messes your profile. And now, I was explaining why this is important for us to understand this. I'm talking to people who want to improve their economic statuses, positions through credit. This debate may never end around, do I borrow? Do I borrow or not? What if I save and I can do without having to to pay huge premiums and interest rates? But I'd say that borrowing today is like a time machine, for your finances. You're acquiring money from the future to use, to do something that you're not able to do today because of your financial muscle. So it's very important that you understand how this money helps you, because we have seen, like in SACCOs, that loop, you can earn from you can benefit from money that you have already borrowed, from the interest that you are repaying. That's why we are saying be part of that ecosystem. And it's important to leave a clean record, because you may not see it, but someday you may need to do it. And anyway, if I can buy this coat in 6 months at say $3, and today I can only get $0.50, say, per month. So in 3 months, I'll have my $3. That means if I get a loan that I'm paying an interest of, say, in those 6 months, I'm paying an extra $0.50, so that is $3.5, then why not get it today at 3.5 as opposed to getting it in 6 months at $3? That is the time value, the opportunity cost, the time value of money, the opportunity cost. And this is a broad topic. It's included in financial literacy. I like to talk about credit understanding as a key arm of financial literacy, because it fast tracks our process. So now, if you agree with me, whether you've been fearing borrowing or you approve of it and you understand it, now that means that you have to position yourself now to be a good borrower. So if you understand and agree that you need to do this to borrow, to fast track your progress, then you need to also understand how to position yourself for that borrowing and consequently position yourself for growth. So it's important. I'll be talking about this more in the next episodes. That is actually where we will dwell around data, because data is definitely going to determine your borrowing your credit worthiness. It's going to determine a lot of things when you go to borrow. You'll be given facts, but here and here, this is how it went, this is what you did. And so I hope that in this first series, you have picked something. And through the episodes, if you have not watched the previous 4 episodes, please go and watch. We have received feedback that we have tried to incorporate. Not all of it will be, depending on the topic that we're addressing, then we'll try to incorporate more. And I'm really glad that you watched these. And I want to thank YFS Analytics because of sponsoring this video. And what YFS does is they are the data partner for SACCOs. So they come, again, they address the issues around data and SACCOs. They also offer member education. They also offer consultancy and training. And importantly, they also offer consultancy around credit scoring and also the systems and the integration of scoring models to do either initial or the entire scoring as we move from these traditional sort of scoring or manual scoring to scoring informed by data. So thank you so much. I look forward to having you in the next one, and your feedback is very much appreciated, both positive and negative. Critic, when everything is kicking off, and even along the way, that feedback helps improve. It is data, so give us your feedback. That is the data we use to improve our offering. And this has been a shot at Alba Hotel Meru. And for the first time since we started this series, allow me to tell you, I have done 5 series, and please subscribe. And like, and importantly, share this with someone you think it may benefit, if you have benefited from it. Thank you, and see you on the next one.